Today we will begin the third of our special multi-column journals. This is the cash receipts journal. You see one on your screen. So we've had a couple so far, and just a couple points about these journals. First of all, the larger the business, the more likely that the accounting staff would be using more than one journal. The general journal that you used in semester one becomes awfully cumbersome after a while if you have a lot of transactions, and many businesses do. A grocery store, for example, has hundreds of transactions every day, many cash, many on account. And when we talk about on account, we've been talking about customers who have their own account with us, and we'll see more of that on this journal page, and they will be paying us back. More likely, in this day and age, people use credit cards, and we haven't dealt with that yet, but we will. In another week or so, we'll be looking at how businesses account for credit card purchases and credit card sales. So first of all, as I said, the larger the company, the more likely that they will be using more than one journal. And it also allows them to spread out the work if there indeed is an accounting staff. Someone could be in charge of sales and other purchases. Another bookkeeper could deal with all the cash receipts. Another with the cash payments. That's one way of dividing up the work. In a small business, though, the accountant is one and the same with all of the different aspects of accounting. So he or she would be using and be familiar with all these different kinds of journals. And as you see, and as you'll see more in the next topic, topic 11, the amount of time to do the posting is really cut down because of these special journals. So anyway, we've looked at sales journals, we've looked at purchases journals, and let's look at cash receipts. And the title is self-explanatory. This is the journal where the company, in this case Acme Supply Company, keeps track of its money coming in. So you'll see a number of columns again. Let's walk through these as we've done before. The date column, account title. This one doesn't say account credited or debited in this case, and we'll talk about why. The document number, this is the source document column again. And the posting reference, we'll come back to that. We'll see why these slash marks are in there in the transactions already journalized. We have a general debit. We have a general credit column. We're not using it here. In fact, in the next week or so, probably we won't be using the general debit and credit column in the cash receipts journal. They will be used, but they will be used for special kinds of entries that we're not ready for yet. So nothing in those two columns in this example. The next column is accounts receivable credit. So that makes sense. There's not an accounts receivable debit here because we're not making a sale. People are not charging it, but if anything, they are paying us back. And we'll see some examples of that. So accounts receivable credit, that's an asset account. If people pay us, that means that account is reduced. That means it has to be credited. So that's why the column is labeled as such. Sales credit, there may well be sales credits, as we'll see. Again, that's a revenue account, increase on the credit side. Sales tax payable credit, we've had that now. In our sales journal, you should be somewhat familiar with that. And this is the new one, cash discount debit in your assignment. Yesterday, you dealt with that a little bit. Once in a while, we will give customers a chance to get a discount. And we do that because we would rather have the money sooner rather than later. So it's worth it to us to give them a discount if they pay us soon. And we'll be looking at how that's journalized. And of course, cash debit. Since this is the cash receipts journal, we'll be using the cash debit column all the time. You don't see a cash credit column because in another few days we'll be looking at something called the cash payments journal. That's where the cash credit column will come in. These are all debits that you see entered here in this particular journal page, and they're all increasing the cash account. So let's walk through some of these to give you an example. One very common one is the first three transactions. They're all the same, and you see a slash mark in account title, could be a check mark, could be an X, simply means We put something there because we don't want to indicate that we may have forgotten it, but the fact is that if there's something there like a slash mark or an X or a check mark, it would mean that we don't need anything in that account title. And we'll talk about why in a second. The document number column. This is going to be an example of cash sales for the day. And the T means cash register tape. And cash registers now will keep track of all kinds of transactions during the day, whether it's an Acme Supply Company, a grocery store, or whatever it might be. And the cash register tape is dated 1/14. That's the date that this entry was put into the journal. And that T stands for cash register tape. The little slash mark here again means, in this case, there's nothing that needs to be posted separately. No accounts receivable, no customer, no creditor involved. Nothing in these columns. And here is the transaction. We had $1,650 in sales. And as you know now, we need to have a sales tax figured in. So we made sales of $1,650, but we charged the customers $94.88. This was the daily cash transactions. If you add up the $1,650, the $94.88, and you come up with a debit to cash. So we gained during the day $1,744.88 in cash. Those were cash sales. This would likely, in many businesses, be done every single day. Not as the transactions are done. That would be much too cumbersome, but at the end of the day, or first thing the next morning, we use the cash register tape, and we get a total of, it would indicate the total of sales and the total that we charge customers for sales tax. So we enter it as you see there. The next day, January 15th, again, the same thing. Don't need anything in the account title. Cash register tape 115 is our source document. Nothing to be posted individually. So again, sales tax, and cash are involved. And as you can see, I've given you 3 of them here. And as I said, these are very, very common transactions. So we don't need to journalize, or excuse me, we don't need to post these individually, not at the end of each day. They can be done, they could be done each day. There's nothing wrong with that. But in this case, the business may wait till the end of the week. It may, it varies from business to business. But if there are a number of them on January 14th, this page can be filled up with cash transactions. And then we can look at the total, and we would be posting the total to sales credit, sales tax payable credit, and to cash debit. So when the posting is done varies on the business and the volume of business. Let's look at January 17th. Andrew Kelly. We had this in one of our previous examples. He charged something, and he paid us in this transaction. So we give him a receipt number 91. We hand it to him, we mail it to him. It could be done in a number of different ways. As I said, the typical transaction is done by credit card. We're not quite ready for that yet, so we'll indicate that the source document is a receipt. So he owed us $486.45. Okay, now if you went back to his account, you would find that the sale made was on January 11th, and the terms were 210 and 30. And we hopefully know that means this is a discount offered to the customer. He will get 2% off if he pays within 10 days. Otherwise, the net amount, total amount, needs to be paid in 30 days. So he charged this on January 11th, and he's paying us on January 17th. So that's within 10 days. So we will deduct from what he will pay us 2%. If you take 2% off of $486.45, you'll get, if you round up, $9.73. And so he pays us a little bit less, $476.72. He owed us that much, so we need to credit his account. And also accounts receivable is credited because it goes down. So he's paid off that bill. So we have to credit $486.45, the total amount. The discount we'll see how that works in the ledger when we get to that, is $973. And the actual cash debit then is less than what he originally owed us. So he paid us $476.72. So the sales discount debit will eventually reduce the sales. That account is a contra account. You may recognize that term from last semester. It reduces the sales because we gave him a discount. We did that because we'd like to get the money early, and this was the incentive that got him to pay us early. So we took a little less, but we got the money early. So we can now use it to put in the bank to earn interest or to pay our bills. Okay. Also on the 17th, we have some more cash sales. The 18th, next day, Tyler Morgan also charged something earlier, and we gave him a receipt number 92. And if we go back and look at the previous example a couple of days ago, he bought this on January 11th in the same terms. So he owed us $224.19, and if he bought it on the 11th, he paid us back on the 18th. That's within 10 days. He gets 2% off. So you take 2% of $224.19, and you'll get $4.48. So we put that in a cash discount debit, and we subtract from the original amount that he owed us, and he actually paid us $219.71. So we have to credit accounts receivable, and we credit his account also so that it balances out to zero, because he now owes us nothing. He's paid us the amount that he owes. But we gave him a discount, so we have to keep track of that in sales discount debit, and that reduces the amount that he actually had to pay us. Okay, we have another cash sales on the 18th, and finally the last transaction I'm going to show you, Marissa Anderson, also on January 11th, charged something. She's paying us back, and we give her a receipt number 93, and she's paying us $84.60. But look at the date now. I've jumped ahead here. I'm assuming there are a whole bunch of transactions in between, but we'll just jump ahead to January 25th. So if she bought it on January 11th, and she did get the same discount offer to $210 and $30, but she did not pay within 10 days, so she doesn't get the discount. So she owed us a total of $84.60, and that's what she has to pay us. There's no sales discount debit here because she paid us after the 10 days have gone by. So again, those are the typical kinds of transactions in the cash receipts journal. Not too difficult. Typically, they would be cash sales, or they would be payments by a customer on account to us. In every case, cash is going to be debited because we're receiving money. And again, if we're going to post this, we would post $9,990.69 to cash. And if that were to be posted and the account number is 101, we would put the 101 there. That means that number has been posted. This number, 1421, would go to cash discount, or excuse me, to sales discount. And that account is a contra account, as it says sales discount debit. So the total of 1421 would be put into that account. Sales tax payable, sales credit, accounts receivable credit, all would be posted to those accounts. So that's how the cash receipts journal works. And I would urge you to go back if you have trouble with any of these journals. My video demonstration is going to be kept on your course page, so you can go back anytime and review the demonstration to make sure you understand how all of this works. At this point now, I would ask you to go back to your course page and follow the directions given there.